What's going on, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to the channel. And while you guys are at it, go ahead and smash the like button for me. I really would appreciate that. Now, you guys know that when you come to this channel, you can expect information about the stock market, the housing market, passive income, investing, side hustles, lazy side hustles, ways of generating income, increasing your net worth, reducing debt, reducing high interest credit card debt, boosting your credit score. All of these are tools and strategies that I have learned to implement in my life over the last 10 to 15, 20 years. And I want to share more and more of these insights with you because if your goal is to retire early, to be able to spend more time with your family, not have to rely or worry about your job's to get stability, your income. If your goal is to create multiple streams of income, I think that a lot of the information I'll be sharing with you guys over the next several videos, including my previous videos, will certainly help you out in your journey. One of the things that me and my family were working on or are currently working on is investing in real estate in Florida, which we're in the process of. It's a tough market. I think that we could be on the cusp of a potential collapse. But you know, only time will tell. We're seeing higher interest rates from the Fed, and I'm seeing a lot of Airbnb listings, as well as VRBO listings, not quite as filled, and certainly not at the rates that we have seen in previous years. So this could mean that the real estate market could be coming down, at least in the Florida area where we're looking to purchase a vacation property. But with that particular property, we want it to pay for itself. That way we could effectively take vacations for free. Now, of course, we would have to make a down payment on the property, but ideally there would be enough cash flow to offset the expenses. And, this would ultimately be listed to generate profits, or at least ideally break even. But if we can make profits, that'd be great. But we would be listing this particular property on Vrbo, Airbnb, Vacasa, a number of other ways to get the property exposed to potential renters that might need it for whatever reason, more than likely vacationing. But what I want to share with you guys in this video, this will be some of my favorite REITs. Now, we talk a lot about real estate, and, I was just talking about a property that we're looking at in Florida. And I know the housing market in Florida is crazy. And a lot of people are like, well, how can I possibly start investing in real estate when I don't have a huge down payment? I don't necessarily have the best credit. I might, you might have high debt to income ratios and whatnot. But here's the thing. REITs are a great way to get started investing in real estate as well as generating passive income. Now, you want to understand these different tools that are available for you that will help you and your family be able to progress. Now, of course, I'm not a financial advisor. This is not financial advice. I'm just sharing with you what I do, what I'm doing, what I've been doing, what's been successful, as well as what hasn't worked for me. That way, hopefully you can learn from my successes and you can learn from my failures. But one of the cool things I like about REITs, or real estate investment trusts, is that they're kind of like stocks. So, you wouldn't necessarily you don't have to have good credit. You don't need to have, a huge down payment. You don't need to worry about debt to income ratios and whatnot that you would normally be concerned with in order to get approved for a mortgage traditionally. REITs are basically, they are companies that invest in real estate. And these are the types of companies you and I as investors can invest in and purchase on platforms like Robinhood, Fidelity, E-Trade, M1 Finance, Moomoo. Name your favorite stock trading app, and 9 times out of 10, you will find some or all of these real estate investment trusts on there. Now, the cool thing about real estate investment trusts is, like I said, you don't need huge credit. You don't have to have, there's no credit requirements for it. There's no down payment required. The cool thing is you can literally, once you set up your trading investment account, you can find the ticker symbol and invest in these companies. Always do your research, guys. Like I said, I'm not a financial expert. I'm not a tax strategist. I'm not I guess I am a tax strategist for my own self, right? But I'm not I don't offer my services to others you certainly want to contact your own CPA and whatnot. But what I like about REITs is that you can take your cash now, and it doesn't even have to be a lot. I think I started with like $50 for the first time. You can start investing in REITs for as little as $50. And literally what I did over the years is I would make these little contributions, what is it? I use the strategy called dollar cost averaging. So what this means is I'm constantly buying stocks, whether the stock market is going up, stock market's crashing. If we're in the bull market, if we're in a bear market, I'm investing in stocks, and I'm investing in REITs, and I'm investing in ETFs, which are exchange traded funds. And so as I'm buying more and more of these shares, REITs are actually paying you. That's the cool thing about REITs. REITs actually pay basically dividends on a regular basis to the shareholders. So you probably have already put two and two together. The more REITs you own, the more money you'll make. And so REITs have a special tax status that requires them. This is not like regular stocks, right? These REITs have a special tax status that requires them to pay out at least 90% of their taxable income to shareholders. So, you could own a stock and the stock make, the company associated with the stock, whether it's Microsoft, Apple, it could be Airbnb stock, it could be Facebook, it could be, Amazon stock, it could be Tesla stock. Any of these companies could be, have record breaking profits, but the shareholder may not necessarily see that profit in their pocket. And the company can choose to reinvest those profits back into the company, and hopefully, they generate a strong return on their invested capital. And then this increases the net value, the overall market cap of the company. And then hopefully that shows up in the share price over time. But with REITs, so in other words, those companies don't have to pay those profits out to the shareholders. They can just reinvest that money. You may not necessarily see it right away, but with REITs, they have a special tax status that requires them to pay out at least 90% of their taxable income to shareholders. So if you're looking for cash, if you're looking for income, I like REITs for that reason. Now, for the REITs that are profitable, that can, for the REITs that are profitable, that requirement can lead to a much higher yielding investment compared to, say, blue chip stocks or investment grade debt, such as bonds and whatnot. Now, as a reminder, dividend yield is the cumulative annual dividend payment divided by the share price. So a REIT that pays dividends of, say, $10 a year, and if that REIT happens to trade for $100 a share, then that means that your yield is, say, 10%. You call out, you drop me a comment down below and let me know the highest yielding savings account that you're aware of. I guarantee it ain't paying 10%. And so, and the cool thing is with these REITs is it kind of lets you invest now and build up this passive income cash flow from these REITs. But at the same time, if you build it up enough, hopefully you're smart enough to be working on your credit at the same time, and you're increasing your credit score, you're lowering your debt, improving your debt to income ratio. And then before you know it, obviously it's going to take some time depending upon your current financial situation. But before you know it, you could be in a situation where, okay, you fix your credit is strong. You've lowered your debt to income ratio because you've increased your income. You're paying down high interest debts. You're refinancing high interest loans into lower interest loans and eventually paying off. You're doing smart things with money. Meanwhile, you're investing in REITs. And what's happening is with these REITs investments that you're making, if you're like me, you're looking to maximize your income and constantly lower your expenses so that you can create this massive amount of cash available to invest. And as you're investing in these REITs, before you know it, you may have 10, 20, 30, 50 grand, 100 grand in REITs after you're constantly investing in these REITs. You're reinvesting the dividends that they're paying you. Basically, you're taking the dividend that they're paying you and you're reinvesting, meaning you're taking that dividend and saying, let's buy more shares with this money that they're throwing off. And so you're creating this wealth snowball, and it creates this positive compounding effect so that the growth of your portfolio grows at a more rapid, the pace at which the portfolio grows increases, and it becomes more and more rapid in terms of how fast it's growing, the bigger it gets, assuming you continue to buy and you continue to reinvest the profits. Now, let's just say you've fixed your credit's better, your debt to income ratio is a lot more attractive to lenders. Now you go out there, you can buy your own real estate property, with the REITs, or with the investments that you've made in REITs. You could sell some of those shares and now go and buy your own individual property that you live in. Maybe it's a rental property, but the simple fact of the matter is that REITs allow even broke people to start investing in real estate from day one. So I want to share with you guys some of the highest, I want to share with you guys some of the best REITs that I've found. And I think that the best REITs aren't necessarily the highest dividend REITs, because high dividend yielding REITs can bring on their own risks. More on that in future videos. So I'm just going to share with you guys a few of the more reliable REITs that I found. But again, do your own homework, do your own research. Don't just blindly, do what I'm doing. Listen to what I'm saying, research it, understand it, digest this information, and then you make the smartest decision for you. But here's some of the REITs that I found that I liked. Stag Industrial, this is ticker symbol STAG. You've got Realty Income, which is ticker symbol O. They invest in freestanding commercial properties. You've got Omega Healthcare Investors, or ticker symbol OHI. They invest in senior care facilities. And as we all know, everyone's going to continue to get older, baby boomers and whatnot. More and more people are retiring, and this company invests in those retirement homes. Many of those are very expensive, and they own these retirement homes, which some people are paying $10,000 a month to stay in these places. There's a lot of profit in these types of facilities. Medical properties, ticker symbol MPW. They invest in hospitals. You got Iron Mountain, ticker symbol IRM. They invest in storage. And so they invest in storage, but they're also a storage containment company. So basically, a lot of companies need to protect their data. So they'll send their data in the form of tape. They'll back up their data onto a physical tape. And basically, Iron Mountain will visit these different data centers, collect these tapes for these companies, multi-billion-dollar companies. The data is very, very important. And so they pay this company called Iron Mountain, as well as other Iron Mountain competitors, to store their data off-site as a way to create like a disaster recovery problem. So imagine like there was like a cyber attack, and they were held at ransom to be able to get their data back. Well, if they at least backed it up, they can restore that data without being at the mercy of the cyber attack from companies like Iron Mountain, assuming they backed up their data and they had it off site. You've got Douglas Emmett, ticker symbol DEI. They invest in office space and apartments. So these are just some of the ones that I have discovered that are pretty good paying. These are pretty reliable REITs, and these have yields of anywhere between 4% to as high as almost 10%. So definitely check those yields out. Check out those REITs that I shared with you guys, and drop me some comments down below. Let me know what your goals are, and I'll definitely see if I can make more content that will help you to reach and achieve your goals. If you got some value out of this video, definitely consider subscribing to the channel. Also drop a like. Appreciate you guys, and y'all be safe.